Marginal costing is the technique of management accounting. And as you know, management accounting, the main objective is to help the management. So this technique also helps the management in carrying out management's functions, that is planning, decision making, coordination, communication, and main point is control, cost control. So all these functions are carried out through this technique, which is called marginal costing. So as we have seen in standard costing, we use standard cost. In marginal costing, we use marginal cost. Now let us see the meaning of marginal cost. Yes, so first read the definition given by CIMA London. The amount at any given volume of output by which aggregate costs are changed. Means if the volume of output is increased or decreased by 1 unit, whatever is the change in cost is called marginal cost. It means suppose you are producing 1000 units and your cost per unit is rupees 10. Then if you increase the production by 1 unit, whatever is the change in cost, or if you decrease the production by 1 unit, whatever is the change in cost is called marginal cost. So we have already seen the difference and the behavior wise classification of cost, in which we have seen the costs are segregated into fixed cost, variable cost, and semi-variable cost. So who will tell me what are the features of variable cost quickly? We have seen this in classification of cost topic, as well as in budgetary control also we have presented in flexible budget the behavior wise cost. So just tell me what are the features of variable cost. Anyone? Yes, anyone?
Ma'am, volume of production goes up, then variable cost also goes up, and
Yes.
total variable cost changes, per unit variable cost is constant.
Very good, Sakshi. So variable cost per unit remains constant and it varies, as the name says, variable. It varies in direct proportion with volume of production. So if you increase the unit, if you increase the volume by 1 unit, your cost will go up by that much cost, variable cost. Variable cost per unit remains constant. We have taken examples of this: direct material, direct labor, direct expenses. All these are variable cost, which varies in direct proportion to volume of production. So marginal cost is the total of variable cost. So what you have to do before implementing marginal costing technique in the organization, what you are required to do, the management accountant has to study the cost structure of the company. The costs are taken, and what he has to do, he has to classify each and every cost under two heads: variable or fixed or semi-variable. And total, you will take total of all variable cost, so which per unit are constant and they varies in direct proportion to volume of production. Total of all variable cost together is called marginal cost. Now why we are doing this? The question will come to your mind, why we are doing this? Now understand, when you classify the costs as a variable and fixed, what happens? The variable costs are the controllable costs. So we are taking them together as marginal cost. And the fixed costs, they are fixed in nature. Suppose whatever be the volume of production, the cost remains fixed. So it is fixed in nature. So fixed cost you cannot touch. You have to incur fixed cost. So there is no question about fixed cost. Fixed cost you have to incur. The organization has to incur for the infrastructural facilities, for some permanent facilities. But the variable cost varies. So to have to make the decisions, to have control, it is very useful to classify the costs under fixed and variable. So total of variable cost you will take together and you will call it as marginal cost. And the fixed cost in total remains constant. In marginal costing, you do not focus on fixed cost. Fixed cost is kept aside, which is not involved in decision making, which is not involved in control purpose. Just tell me, have you followed? Have you
Yes.
followed the concept of marginal cost?
Yes, ma'am.
Yes, ma'am.
Can you see the PPT?
Yes, ma'am.
So, in marginal costing, if the organization wants to implement the marginal costing, first step is to find out marginal cost of the product, the total variable cost of the product. So, is the definition clear to you? So now we will see characteristics of marginal costing, which is the technique of management accounting. So first step to implement marginal costing is each and every cost is segregated into fixed cost and variable cost. There are some costs which are semi-variable, means not 100% fixed, not 100% variable. So the semi-variable costs are also divided in variable and fixed. Just we have seen in budgetary control. So what we have seen, 20% fixed, 80% variable. 10% fixed, 90% variable. So variable part is taken together and it is called marginal cost. So the for decision making, we are going to use marginal cost. So in marginal cost is taken as product cost and fixed cost is kept aside and it is called period cost. It is fixed for that particular period. Now there is one more concept used in marginal costing, which is very important. The whole technique is based on that. That is contribution. So you must have used this word. So for example, suppose you are celebrating your friend's birthday. Then what you do? Together you plan something. Then there is some cost. So suppose you have bought a gift for your friend, then party arrangements, then whatever, suppose you have visited the restaurant. So what you do, you take the total cost put together and you divide among friends. And what you call, this is the contribution of the party. So contribution per person is always calculated when you celebrate something. Same way, contribution of the product to the profit in the organization is calculated. It is called contribution. So contribution is very important part of marginal costing. What is the contribution per unit of product? So this is the new concept. And how to calculate contribution? Selling price minus marginal cost. So if you observe, fixed cost is kept aside in marginal costing. Then valuation of inventory. Valuation of inventory is done on the basis of marginal cost. Same way, pricing is also done on the basis of marginal cost. So everywhere you are going to consider marginal cost of the product. Have you followed the features or characteristics of marginal costing?
Yes, ma'am.
Yes. Now,
Yes,
if you have
ma'am.
any doubt, ask at the same time. Okay. Now, what is the usefulness? What are the advantages of marginal costing? So, first and important point, as it is a technique of management accounting, it is helpful to management in carrying out various functions. Helpful to management means all functions of management, it is helpful. So, first point, planning. So if you know the cost of product in advance, you can plan for future. Planning, then fixation of price, decision making. What should be the product mix? Decision making. So for all the decision making is very important function of management marginal costing, cost control. So all functions can be carried out with the help of marginal costing. So it is a very important technique for the management. Then next important point, cost control. As we have seen the earlier two techniques, that is budgetary control and standard costing, all are very useful in having control on cost. Same way marginal costing. So the marginal cost is set and the workers have to complete the production in the given price, given cost. Now next important feature of marginal costing, that is fixed cost is kept aside. It is not absorbed into the cost of product. So for example, there is company called A Limited which manufactures three products, P, Q and R. Now all these three products are manufactured by the company, and what we do in regular costing system, there is we have already prepared a cost sheet. So in cost sheet what we have done, we have started with the cost of raw material, material consumed, labor, etc. So for that purpose, what we have done, we have overheads, we have allocated the overheads. So first we have divided the company into cost centers. All the direct overheads or direct costs are given to the cost center. It is called allocation. If the costs are common, it is called apportionment. So all the fixed overheads are absorbed into the cost of product by following a very long procedure in traditional costing. What is done in marginal costing? In marginal costing, you deduct the fixed cost at the end and you find out the profit. You do not absorb fixed cost into the product. That is called marginal costing. That is the unique feature of marginal costing, that the costs are not absorbed into the cost of product. The fixed overheads are directly deducted from the total contribution. Then basis of fixation of price. So marginal cost is the basis of fixation of price of the product. That is the usefulness. So it is very, it becomes easy to find out or to decide the price of the product and to earn the profit. Then it helps in profit planning. Then afterwards, we are going to see the cost volume profit analysis. So as we are looking at the costs, there is a direct relation between variable cost, fixed cost, selling price. So you can, by using the mathematical formula, you can carry out cost volume profit analysis, which helps in profit planning. So that is again an important role that marginal costing plays. And we are going to solve questions on cost volume profit analysis. So cost analysis is also possible in marginal costing because cost analysis plays important role. You have to segregate all the cost, you have to check the behavior of all the costs, and you can analyze it, which helps in decision making. Is it clear? Yes?
Yes,
Yes,
ma'am.
ma'am.
Yes. So So the main use of marginal costing is decision making, cost, volume, profit analysis. Now we are going to see very important part of marginal costing. So I always assume you have opened your notebook and you are taking down the important points. Now, if you have not opened your notebook and note down the formula, which we are going to see in cost, volume, profit analysis. Okay. Now, first important term of marginal costing, as I have said, is contribution. Contribution plays very important role in marginal costing. So, all the questions of marginal costing starts with finding out contribution. Okay. So, first we will see the formula of contribution. So, what is the formula? Sales minus marginal cost. Now understand, it depends upon the information given in the question. Okay, so if in the question it is given selling price per unit, marginal cost per unit, then you will use that information. That is selling price minus marginal cost per unit is contribution per unit. Suppose in the question total sales are given, total marginal cost is given, then how you will find out? Sales minus marginal cost contribution. So as per the information given in the question, like we have done in budget, as per the information given in the question, you will calculate contribution. Is it clear? Have you taken down the formula, contribution?
Yes, ma'am.
Now next, how to calculate profit under marginal costing. So profit is equal to total contribution minus fixed cost. Now I will show you the cost sheet which is prepared under marginal costing. Suppose the company is manufacturing two products, product P and product Q. How to prepare the cost sheet? First you will start with sales. So sales of P, sales of Q is equal to total sales minus marginal cost. Marginal cost of P, marginal cost of Q, total marginal cost. So you will also find contribution of product P and product Q. So total contribution. Up to this, is it clear? First, you will take selling price of both products, PQ. You will deduct marginal cost and you will find out contribution. So, contribution of product P in the total profit of organization, contribution of product Q in the total profit of organization. Now, this is the important feature of marginal costing. You will take total contribution minus total fixed cost is equal to profit. Fixed cost you will not absorb in the cost of product P and Q. Fixed cost is kept aside and it is deducted from total contribution. Have you followed this unique important point of marginal costing?
Ma'am, can you repeat the point?
Yes. Listen properly. In marginal costing, fixed cost is not absorbed in the product P and Q. So how you will prepare the cost sheet? It starts with sales. So sales of product P, product Q, total sales minus marginal cost of product P, product Q, total marginal cost. So you will get total contribution. Total contribution minus total fixed cost is equal to profit. Have you followed?
Yes, ma'am.
Yes, ma'am.
Yes. So you will not give fixed cost to product P and Q. You will calculate contribution and you will deduct total fixed cost to calculate the total profit of the organization. That is the difference between traditional costing and marginal costing. So here total contribution minus total fixed cost, that is profit. Is it clear?
Yes, ma'am.
Yes, that is the very important point of marginal costing. So now we have seen the first two formula. First formula, contribution is equal to sales minus marginal cost. Suppose selling price per unit and marginal cost per unit is given, you will get contribution per unit or total contribution as per the information given in the question. Then profit, total contribution minus total fixed cost is equal to profit. Now next is PV ratio. Now understand the significance of and meaning of PV ratio. So first, what do you mean by PV ratio? Profit volume ratio. As I have told you, in marginal costing, we carry out cost volume profit analysis because there is a mathematical relationship in these three variables. If you change the volume, your cost will change, your profit will change. So these three variables are interlinked, and so we calculate profit volume ratio. Okay. So what is the meaning and why, what is the significance? See, what happens, the sales are given in lakhs. Suppose they are 5 lakhs, 8 lakhs, etc. Then the contribution will be in different figures. So P is different, Q is different, R, suppose 3 products are manufactured, R is different. Now, how you will find out what is the contribution actually of PQR? So you are required to calculate percentage. So it becomes easy. So suppose P is contributing 30%, Q 20%, and R 50%. So it helps in decision making. So what is PV ratio? PV ratio is expressed in percentage. What does it give? If sales are 100, what is your contribution? Suppose PV ratio comes as 20%. Means if sales are 100, you will get contribution of 20. That is called PV ratio. So to make the uniform base of rupees 100, you calculate PV ratio in percentage. It definitely gives you the analytical study of what is the contribution of the product. Have you followed the concept? PV ratio?
Yes, ma'am.
Yes. What is the formula?
Yes, ma'am.
Contribution upon sales into 100. It is always expressed in percentage, right? So have you taken down the formula of PV ratio?
Yes, ma'am.
Yes, ma'am.
Yes, ma'am.
Now next, now it is mathematics. So PV ratio is equal to contribution upon sales into 100. Now suppose sales and PV ratio are given, you can calculate contribution. So next formula is sales into PV ratio is equal to contribution. So suppose it comes to 20. So 100 into 20%, 20 is the contribution. Have you followed?
Yes, ma'am.
Yes. Now there is one more formula. So what can happen in the question? Suppose 2 years data is given. 2019, 2020 sales profit are given. So what are common in these 2 years? Fixed cost remains constant and marginal cost per unit remains constant. So again there is a relationship. So there is one more formula to calculate PV ratio, which we are going to use later. Change in profit upon change in sales into 100. Okay. This is the formula, one more formula of PV ratio. Have you taken down and followed?
Yes, ma'am.
Yes. Then next is break even point in units. Now, anyone knows what is break even point?
Yes, ma'am.
Yes.
Ma'am, when there is no profit, no loss, total cost is equal to total revenue.
Correct. Very good. So whenever why break even point is calculated? you have to reach the minimum level of to earn the profit, and that is called break even point. So break even means you have reached the level to find to get the total cost of the product. So that is called break even. There is no profit, no loss situation. And why break even point is important? You must reach break even point, otherwise you will be in the situation of loss. So break even point is the point where you will not, there is no profit, no loss. Is it clear? Now break even point can be calculated in two ways. Either it can be calculated in two ways, either in units or in rupees. So what is in units? In units means how many units are required to reach at the break-even point. That is called in units. And in rupees means how much cells are required to calculate the break-even point. So we will see what is break-even point in units. Total fixed cost upon contribution per unit is called break-even point in units. How many units you are required to sell to reach at the break-even point? That is called break-even point in units. Now break-even point in rupees or cells or value. There are two ways. Either you can, what you can do, break-even point in units into selling price. Same answer you will get. Or there is one more formula, the total fixed cost upon PV ratio. Both can be applied to calculate the break-even point in units, break-even point in rupees. Have you followed?
Yes, ma'am.
Yes, ma'am.
Yes. So that is called break-even point. Now, next term used in marginal costing is margin of safety. Means how much above you are from break-even sales. So the formula is actual sales minus break-even sales. Break-even point, no profit, no loss. How much above you are from break-even sales. Then margin of safety, there is one more formula, profit upon PV ratio. That is one more formula for margin of safety. Now required sales. So required sales means what? Suppose you want to earn a particular figure of profit, how much sales are required? So required sales is equal to desired profit plus fixed cost upon PV ratio. This is called profit planning. If you want to earn profit of 2 lakh, how much sales you are supposed to make? That is also you can get from this formula. Okay, so you must have noted down all the formula. Now next lecture we will start solving the question on marginal costing. We will see the application of these formula. Okay.
Yes, ma'am.
Yes.
Okay, ma'am.
Yes. Now we will take attendance.